Hey traders, David Frost, LazyGapTrader.com. In this video, I'm going to show you an example of a phenomenal morning gap trade from this morning, Friday, November 17, 2017. This trade was given to my members at 9 o'clock in the morning Eastern Standard Time, 30 minutes before the opening bell even rung. Let me explain a couple of things. Gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. Let me explain. I teach a course where traders learn two specific gap trading strategies. The first one is known as the morning gap trades. That's what you're looking at on the screen in Foot Locker. The morning gap trades are when stocks are gapping higher or lower at the open. They create an opportunity for traders. The opportunity is when traders can identify a specific price where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction. In the course, traders learn all the specific criteria that's involved with the morning gap trades. Which stocks does this work the best with? What type of volume are we looking for? How much of a gap higher or lower are we looking for at a minimum? And most importantly, how do you calculate the specific price where these stocks will be drawn to and then have a price reaction from in the other direction? All these things and a whole lot more are taught in my course at Lazy Gap Trader. We're going to get into the chart of Foot Locker in detail in a minute, but the other thing I do is give my traders an opportunity to get my gap trade sent to them each and every morning at 9 o'clock a.m., 30 minutes before the markets even opened for business. Here's a copy of the email that went out this morning. As you could see, it arrived on the inbox at 9:03 a.m. and that's Eastern Standard Time. This morning, we had 6 potential morning gap trades on the board. Now, what's taught in my course is we only want to take the trades that have the highest probability of success, and that means that they have to hit the specific levels that we calculate, the specific levels that traders who take the course learn how to calculate for themselves on each of these stocks. So this morning, only one so far hit its price level, and that was Foot Locker. Gap higher, resistance levels are $41.54, $46.01, and $50.48. These are separate trades from each other. If the stock hits the 41.54 and pulls back, we take a profit, and should the stock continue higher later, the 46.01, for example, is a separate trade altogether. You're going to get another price reaction at that level. Stop and profit target is about 35 to 70 cents. These are minimum profit targets, and I'm going to go over this in detail when we get back to the chart. Before we do, I just want to emphasize one more time, these are the highest probability trades in the morning that we can find, and once any of these stocks on the list hits these price levels, that will produce a high probability trade. All this is taught in my course and a whole lot more. Let's go back to the chart of Foot Locker and explain in detail. You can see here that the stock closed yesterday at $31.85. Foot Locker reported their earnings. The stock was getting a tremendous rip higher. We calculated and identified the level of $41.54, where if this stock were to hit that level, it should have a price reaction in the other direction. As soon as the market opened, it traded right up to that area and it reversed right down from that area, just as prescribed in the email that went out to traders 30 minutes before the opening bell even rang. Now you have to understand, any of these price levels that you saw in that email, traders that take the course are able to calculate the same exact price levels. And here's what's important. They learn the why. Traders learn the why this works. Once you understand the importance of these price levels and why they work, why this strategy works, it gives traders a different outlook when placing trades. It gives a different comfort level because you have a different type of expectation of what's supposed to happen at some of these price levels. It takes a lot of the mystery out of the market. It takes a lot of the guesswork away from day trading. You need to understand the why stocks will trade to certain price levels and why they react from price levels. Frankly, it's the missing link that a lot of day traders need that would actually turn around a lot of their day trading efforts in a positive direction. So you can see what happened. It's pretty obvious. The stock actually made a high of 41.71, just pennies above the level identified in the morning. And then look where the stock already went down to, a low of $38.26. That's a tremendous pullback from that level. That's a $3.28 decline from an entry level given out a half an hour before the opening bell even rang. Now, in the course, traders also learn how to turn trades like this into risk-free, emotionless trades. What I teach, and there's a whole video module on this, is to take a certain amount of profit within the minimum profit target, we put some money in our pocket, and then we let the rest go and trail our stop along the way. And that's the way that traders can turn a scalp trade into a huge winner all within the same day of trading. Folks, all this happened within an hour. The stock was down over $3 within the hour. Everything you see here is taught in my course at Lazy Gap Trader. How to calculate the levels, how to maximize the profit. The course is comprehensive. It's soup to nuts. Listen, this is a strategy that you can use each and every day for the remainder of your trading career. We do this each and every day. You see the videos posted on YouTube each and every day with these winning trades day after day after day. If you want to learn how to do this for yourself, come over to Lazy Gap Trader, check it out, learn what it's all about. Anybody with the desire and the discipline to learn gets my full and complete support. No question ever goes unanswered. I'm David Frost, LazyGapTrader.com. Thanks for tuning in, folks.